Hi guys, this is the Trading 101 series and this is lesson 6, why stock prices change. If you haven't seen lesson 1 to 5, I'd advise going watching those first before watching this. And remember to like, subscribe, share, all that good stuff. Let's get straight into it. Once again, we're in lesson 6, halfway there. Remember to like, subscribe, share, comment, all that stuff. I've got Facebook, Twitter, and Instagram, and do not trade on all social media platforms. And if you check the description section below, you'll see a link to my mailing list and Discord group, which is a chat room for like-minded traders and investors. Let's get straight into it. So why do stock prices change? Well, the simple answer is demand and supply. Each company listed on the stock market provides a limited number of shares to be exchanged. When demand exceeds supply, the price will rise as more buyers try and get shares. And when supply exceeds demand, the price will fall as more sellers try and offload their shares. Volume is an indicator that shows demand in a market. When high volume is combined with an imbalance one way or another, whether it will be excess buyers or excess sellers, this will lead to a price change. So as you can see in this picture on the right hand side, in this section here, there's a large green candlestick which denotes that there's a lot of buying pressure, and that means the volume is really high at this period of time, and because of that, price started rising. And in the same way, price sharply sold off when there was a lot of selling pressure, so that means there was imbalance in the amount of sellers there were in comparison to buyers, and there was a large enough amount of sellers to send price falling dramatically down. So volume is a good indicator for letting you know who's winning out of the buyers and sellers and by how much.